Happy Friday, everyone. Jason Jacobi here with Boyer Financial Services. Again, happy Friday. This is your closing bell for August 19th. Hope you're all ready for a great weekend wherever you're at in the U.S. I know I am hoping to get in some good pool time and beach time with the family, but it is supposed to be a beautiful weekend here in Newport Beach. Anyway, let's get into our closing bell for the day. Markets as of this week all closing negative. The Dow Jones down 0.17%. S&P 500 down 1.21%, and the NASDAQ leading the way down 2.62%. And a quick crypto update, Bitcoin was down 12.4% this week, which was approximately below the 22,000 mark, 21,000 and change approximately. But in other news for the week, so inflation, an article just came out today talking about how raising a child, you'll be spending over $300,000. Again, $300,000 per child, which is over spending $18,000 a year approximately per child if the kid was born in 2015 or after. So that's just saying, hey, inflation obviously been higher than normal. So Brookings Institute did a little study on how much that would cost per child for a mid-America, middle-class working family, how much each child would cost them per year in expenditure. And that's over $18,000 a year. So I have two young kids. They cost a lot of money, especially right now in inflation. I know everyone's feeling the same thing I am. But to hear that over $300,000 per kid, might be time to sell our kids. Just kidding, totally kidding. But in other inflation news, President Biden signed the Inflation Reduction Act into law. A couple quick things I want to touch on that, okay? We'll kind of go more in depth on this in the future. We'll do another video for it. But basically, breaking it down once you look at the benefits of it, the expenditures, the increase in taxes. So the benefits and price reductions that most Americans are going to start seeing, whether it be Medicare or other cost-saving measures that were included in the bill, don't start until at least 2025, sometimes 2026. So it's going to be quite a bit of time here before we're going to feel any release in some of these prices that we've been feeling, and whether again it's Medicare or drug prices, whatever it may be, co-payments. But what will happen immediately is there's going to be some cost increases immediately. It's not going to help inflation. The bill actually has zero impact on bringing inflation down, which is called the Inflation Reduction Act, but it really has no inflation reduction. And that's not my personal opinion. Just multiple nonpartisan experts have went through the bill, combed through it, and have said the same exact thing. So with spending over $433 billion in the bill, and an increase in taxes of over $736 billion. It could actually hurt corporate profits, which it actually will, because they have a corporate minimum tax now of 15%. So it could end up decreasing wages, lessening work hours for their employees, and potential layoffs. Again, this is all could-be's. But again, the more taxes that companies are going to pay, the less cash flow they're going to have to pass down to their employees. And probably the higher cost of goods as well, especially right now, right? We're already feeling the pinch, but that could actually end up hurting inflation in the near term. But again, to be seen, we'll kind of dig into it a little bit more, but that's just in the initial thoughts. U.S. existing home sales fell in July for the 6th straight months, which is the longest streak in over 8 years. Pretty crazy there. And then also, the Biden administration ended its underwriting of COVID shots and treatments, or it's talking about it. They're having meetings with insurance agencies and pharmaceutical companies, I think, in the next few weeks or so. But they're basically shifting control of the pricing and coverage to the insurance agencies. So it could be potential billions and tens of billions of dollars to the insurance companies in the future. So again, more to be seen. We'll kind of sift through that as news comes out, but at least I wanted to give you that update there. And a big one, I actually love this next news point here. The Big Ten, USC and UCLA's new conference as of next year, signed a $7.5 billion deal with Fox, CBS, and NBC. Adding USC and UCLA into that conference actually probably drove up the bargaining price a little bit. But this comes as, for the first time in the month of July, the first time in history, streaming services captured more viewing time than cable TV. So that's something to watch. Pretty interesting. But again, so that was all big news for this week. Again, we'll dive into some other things as the news comes out. But I hope you enjoyed this week of this video for the closing bell for this week. And we'll come back to you next week with some more real-time, up-to-date market and economic information. I'm Jason Jacobi, Boyer Financial. Have a great weekend.